That is loading. Really excited to share with everybody today a lot of the things that we have been researching and found out, and are just really hoping that this tool that we've created for you is going to be extremely beneficial and useful for you. We're going to go ahead and let people join. Start joining in the lobby. Let's see. Brittany will be managing the Q&A. So feel free to put questions in there if they come up as I'm going through. If I go too fast, if I skip over something, I want you to be able to be getting all the information that you need as well. We're also willing to, answer the phone and help you after this as well. So. Okay. Got about a minute to go and we'll get started going through the spreadsheet and some of the law that has been set up for us. Okay, so welcome everybody. Glad to have you on, and I'm looking forward to giving you some really good information on how to use this payroll protection program forgiveness worksheet. A little disclaimer is that I am not a CPA and I'm not an attorney, and so this is all based off of our interpretation of the law. So definitely have your CPA review this. I will tell you though, I'm pretty confident we got some good tools for you here, and it's going to be helpful and actually helpful to your CPA as well. We want to make sure that you're tracking as you go. And so I'm going to go through this sheet and explain what we have going through and how to use it. I'm going to show you there's some links here that are here, and you can start their quick explainer video. I'm going to go into a little bit more detail here, but right within there, I click that right within the spreadsheet is another, it's 8 minutes. It's a little bit quicker explainer than I'm going to go a little bit more detail right now. But this video that's embedded in your spreadsheet, it will also run through it in a faster in a faster way. There are 3 sheets that you'll need, and the 3 sheets all depend on the way that your payroll works. Okay, so if you are, let me actually pull one up. If you are weekly payroll, we have a sheet, and biweekly payroll we've made available to you immediately. If you are semi-monthly payroll, which we actually teach for people to be semi-monthly payroll, because if you are semi-monthly payroll, it makes the payroll accruals for your books so much easier to do and track. So what semi-monthly is the 1st to the 15th, paid on the 20th, and the 16th to the end of the month, paid on the 5th. And what that allows you to do is take your entire payroll that's on the 5th and move it to the appropriate month before that. So when you're looking at your P&L, it's not just a tax document, but a report card for your business. And that would allow you, so for example, if we're looking at April, you would have all of April payroll compared to all of April sales, and you get good ratios, and you don't have those months where if you're weekly, you'd have 4 months out of the year where you have 5 payrolls, and if you're bi-weekly, you would have 2 months of the year with 3 payrolls. And and even the off months, your payroll is actually undercounted because it's 28 days of payroll that doesn't even line up in the month. And so it's a little bit more difficult. So if you're looking at this, we have to know that on semi-monthly, that the distribution date of the loan has to be put in at the beginning, and then we need to line up the 8 weeks covered under the PPP program. And if you look here, the payroll dates all fall on different dates. So you can see the week of 6/3 would be that payroll that hits on the 5th. And so we have these payrolls lined up. Okay. So from here, I want to, we'll start that. I'm going to actually go to a week. Most of you, okay, a lot of you are weekly. Most of you are bi-weekly. So I'm going to go off of the bi-weekly sheet. They're all very similar. Like I said, if you are semi-monthly, just reach out to us, let us know, and we will customize the spreadsheet for you. It's kind of funny to hear me say customize the spreadsheet, because years ago when we started programming software back in 2008 and we made the decision to start programming software, it's because of having to customize spreadsheets for every single different person. And we're like, we need to have one system all in one place where people can do everything and it's all connected in the database. And that's where Restaurant Systems Pro was born, was from those ideas. All right, so you have your video that you can click that will give you a run through that's a little bit quicker. You're going to edit the yellow parts here. So if I go here and say, okay, well, my start date will say that today we got funded. Let's say my start date's today. It's going to be from your banker, whatever the loan documents say is that's when your 8-week starts. I don't disagree. I mean, I disagree with it. I think that you should be able to start for when you need it. It's just the sad reality of where we're at with the way that the bill was written. I think that the people that are getting their money in the second round are actually going to be in a better position to be able to ramp up their full-time equivalents, or FTEs, as we'll refer to them in this call, later on in the process. If you have received the EIDL advance, then you have to put this in there because it will reduce the amount of your PPP loan. You can't be getting both. You can't get the PPP and the EIDL. So if you've already gotten your economic injury disaster loan advance, then you have to reduce it. And so you'll put that in there. Some of you didn't get the full 10,000. It depends on your number of employees. So whatever your EIDL advance in there, you're going to plug that in and that will collect it. Right here, this FTE criteria button here, it's going to explain these cells and what you can do. And I'm going to click it so you can see how it loads. And what I want you to realize is you got to be a little bit patient. It takes you to congress.gov, and then be patient with it and let it load. I found that it's not always working, and I found that it works better in Chrome than there we go. So here we go. That's Chrome. If you give it a second, it will load directly to the part of the bill. Well, I guess it's a law now. But it will take you directly to the part of the law that explains the sections of the spreadsheet that we're talking about. Right. And so this here, it's kind of talking about, figuring out what your average number of full-time equivalents that you're comparing your business to. And you have, you actually have a couple of choices on how you do it. So, one of them is taking the average of February 15th, 2019 to June 30th. Let's say you weren't open, or it was off. You can choose the beginning of this year. So we're there. Let's see. Right. So just let me know what's going on with the chat, Brittany, and I will answer questions and stuff. So if you have a question, use the Q&A button, and we'll go from there.
Awesome.
All right. So
Gene wants to know, Fred, if
okay.
when he's received the PPP loan, but then a week later he received the EIDL funds also came in, what should he do?
Yeah, so he would want to fill in those EIDs. So even though they came after, he's still got to deduct it from his PPP. So when he's doing the spreadsheet, he's going to put his EIDL in right here, even if it came after his PPP. It's still going to be reducing his PPP amount. So it's okay that he got it, and it's okay that he applied for both, and he's still eligible to go through the process to actually get an EIDL. And where he's got to consider is you may not even want an EIDL unless you're able to refinance some old existing debt at a longer amortization, lower interest rate. And if you're going to be able to save on that based on the on the lower interest rate that the SBA is going to get, it also may move it to just a different, that longer amortization just can really help you. The people that don't have existing debt, sticking with the PPP is likely the way to go, and you can only get the PPP, so then you have to reduce your EIDL advance from your PPP loan. So hopefully I answered that. Maybe I can get a thumbs up from Dean if that answers the question on that. I think it's a really, really, really good question on that.
He said okay.
Okay. So another thing with FTEs, and as we'll get to, just a couple more questions that we'll get as we're going from there. If you click here, there's a drop down. So and it can help you in calculating your previous year's FTEs to show you how you're collecting them. So there's these two choices that you have where you can choose your basis for FTEs on the previous year from 2/15 to 6/30 of 2019, or if you weren't open during that time, you can choose from January 1st to February 29th as the calculation of your previous FTEs that you've done. Now you have the choice of what you want to do. So it's not, so I actually just misspoke that it is, let's see. So when you're looking at this, it's the, this is the key, and this is why we put that in here. It's at the election of the borrower, okay, here, that you can choose this date range or this date range. And so what you're going to want to do is choose the lesser of the two, because then it's going to be easier for you to get to your FTEs. And what a lot of restaurants are having the problem with is, how do I use all my PPP when I am not fully up to ramping up to my sales? Our government's not even allowing us to fully open the business. Some states are at 25% capacity that we're doing. Some states are at 50% capacity. And so the problem of the restaurateur is, how am I going to use this all? So because it's this section here at the election of the borrower, you're going to want to choose the lesser of these two choices when going in, okay? So that's definitely a something to consider when looking at this date range that you're choosing. Okay. So what you'll do here is, this is just going to be a rounded number that you calculate. Yes. Thank you, Brittany.
Sorry about that. We have a couple. We have a question from Michael. Yeah. He's asking, would you be recommending the 2019 or the 2020 timeframe?
Whichever's less. Because as you ramp up, you want to be able to, you need to get up to the FTEs that it's comparing to. So this is your basis that your FTEs this year are going to be compared to. And so you want to choose whatever's less of these two numbers. What's my average FTE per month for this time frame or for this time frame? Okay.
Also, he wants to know, are you required to use whatever time frame was submitted with the application?
No, it does not say that. It says that, when it comes to forgiveness, that this is the time frame that you're using. So there is, and the only reason I'm speaking to that is in reading this bill, it doesn't say that. It says that forgiveness is based on the XYZ criteria. It doesn't say forgiveness is based on what you originally submitted. It just saying, hey, this is the criteria that you have. And the other thing that's happening is, these rules have been changing quite often as we go. And so there's not a whole lot of nitpicking when it comes to this stuff, because they've been changing the rules all the time. So and likely those rules were different when you submitted than they are today. So it's based off today's rules when it comes to that. Another question?
No other questions. Dwayne just wanted us to know, guidance came out yesterday that the expenses paid for with forgiven PPP funds will be deductible for tax purposes.
Fantastic. That's good. That's a good share. I like it. Very good. All right. So here we go. So we have this these date ranges we can choose. I'm recommending you choose the lesser of the two so that you can more easily meet your criteria. Okay. So once you've calculated what my average number of full-time equivalents, and the definition of a full-time equivalent by the SBA is 30 hours per week. So if they work more than 30 hours per week, they will be considered a full-time equivalent. Okay. And so that's going to be a really, really important thing in this. Okay, so now when we get there, it's going to calculate. So I just put in a random number. Let's say I put in that your PPP was $100,000 and you got the EIDL. I put that number in there. It will, oh, I did 10,000. So I'm like 0. Okay, 100,000. Okay, so this would tell me that my biweekly, if I'm biweekly payroll, it's going to tell me what I'm expecting my payroll to be to reach that 75% threshold. So when you plug all this in, it's going to give you the number of what 75% of your 95,000 is based on hitting your payrolls in here. Okay. So if we go in here and we go, okay, well, 16,875, it may look like this. And what I'm going to advise you to do is once you get to this table down here, to actually put in, what you're expecting your payroll to be, your best guess, and then in this week one. So in the first week of eligible payments, let's say that, hey, we're ramping down. We got a $10,000 payroll here. Okay. And then we're going to ramp up and we have a $15,000 payroll, right? When we go, let me actually take out some of these other expenses here. You can only edit the yellow parts so that you don't mess up the spreadsheet. Okay, I'm gonna leave that in there. So when we're doing this, and let's see, other covered expenses. Okay. So
Hey, Fred, while you're doing that, we have a couple questions.
Okay.
Roger said, I thought the FTE was 30 per week, not 40.
I said 30. Maybe I misheard.
Okay, awesome.
Yep.
And then Christina, she said, I read at On Point that if you were a seasonal business, you had to use the 2019 pay period. Did they change that, or did you hear anything like that?
No. So if you look here, it's the 2019 pay period. So it's really the choice, no matter if you're seasonal or not, they're taking the previous years. So your choices are last year's 215 to 630, or you can choose 1/1 to 229. Right. And that was at
awesome. And then Ryan.
And yes, Roger, if I said 40 hours, I apologize. It's definitely 30 hours. Go ahead.
2 part-time employees are counted as 1 full-time. That's correct, Ryan.
We're going to get there. We're going to get to that. Yep.
Allison said, "Do you have a worksheet for semi-monthly payroll, or does it matter with the worksheet?"
Yeah, she missed the beginning. So if you're semi-monthly, so go ahead and answer those. If I've already answered the question, Brittany, go ahead and feel free to answer that.
Okay.
So the semi-monthly has to be customized, and so you'll have to go back and see the recording in the beginning of that, but we will customize a semi-monthly. All right, so we go through that. If we're looking here, I just plugged in some payroll numbers as a best guess, and what it's telling me is that I'm only at 67% of total used, of total payroll used. And one of the things about this too is your federal payroll taxes, Social Security, 941s, your federal taxes are not included in this. So the federal government wants their money, right? So they're not forgiven in this. So you're going to still owe your taxes on your payroll for all this. However, you can claim your state taxes, your unemployment state taxes, and your state unemployment tax as well. Other things covered are the healthcare benefits paid out, and also the tips or the equivalent of tips. So you can pay out on your PPP based on the tips that your employees would have earned if you were open, and that can be calculated off of the last payroll that they've done. The other questions that we've had are, can I put myself on payroll if I haven't? And for that is, it has to do with, is there's been nothing that says about who you can add to payroll. But one of the things you have to be careful of is, like, there's certain formations of a company that can. So this is where you're going to have to get advice from your CPA if you can be added. Because I know that for our company, I cannot be added to payroll. I have to take an owner's draw because of the LLC that we have set up. So you're going to have to ask your CPA if you can add yourself to payroll on that, because so I cannot give you advice one way or another, because it's specific to your each individual company. There's no blanket advice that I can give on if you can be putting yourself on payroll, and it has to do with if you're able to. So if you're on payroll before this, though, there you go. And you can still be on payroll, assuming that you are doing it correctly to begin with. And here's the other thing is, some of you are having these situations where employees are not wanting to return, right? And so there's a couple things here. There's the rules of what you're doing. If somebody refuses to come back to work, well, they're going to put their unemployment at risk by refusing to accept work when you're on unemployment. The second, and that will, and just allowing them to go collect unemployment, that will also hurt your unemployment ratings as well. The other part of it is there has been a contraction in the restaurant world, and what's happening is there's a lot of high quality people that are out there that would never have been looking for a job before. They're great employees working for companies that did not survive this, or not bringing them back, or whatever reason. And so what I'm finding with our membership is that there's a great number of high quality resumes that are being submitted, and the true go-getters, they're not wanting to be sitting at home, and so there's some people that need to be. I don't want to discount that, due to having to care for elderly people, having to care for their kids with no school. There's certain situations, like, yes, I can't get out there, but there is also a segment out there that really wants to work, and they're putting themselves out there to really find the next great opportunity. And if you can grab them up and get a new employee, there's nothing that says that you have to have all of your employees that you employed before come back. You just have to get your FTEs up to a certain level. Okay. So what I recommend is, as you're going through this, like, I got a pre-plan to go, well, I'm not at 75%. And so I got to figure out how and where I'm getting up on that too. So that is something to consider with that. So there's the second page here, and this is what I want you to do. Is I want you to pre-plan out your FTEs on what you're going to do. So here on this column right here, you're just going to put in anybody that's over 30 hours a week. If they're over 30 hours a week every day, there's no calculation that has to be done. You just have to be able to prove, if you get audited later on, that they were over 30 hours, right? So the second they go over 30 hours, they are full. And so you can just pre-fill it in on what you think you're going to do over the 8 weeks, so that you have a plan. And then as each week passes, you overwrite it with actuals. Okay. Kind of like our power purchase allotment system works in the software. We have this plan for purchasing, and then real life happens and we overwrite it with actuals. And if we went over or under, we're going to be there. One thing with the formulas is just make sure that you go as high as soon as you know that you've reached the threshold that matches this you can just stop the calculation. Like, so if your full-time will match your previous full-time, then you actually don't need to track all the extra hours and stuff. You'll meet your minimum, and you're going to want to make sure that these numbers just match up. So you just need to do the spreadsheet up until where it matches your previous, and then if you have those in full-time, you don't even need to track the part-timers, because you've met your criteria in there. And that's what you want to do, is get this up to, or at least where it matches the previous years, and you're good to go. And so, like I said, pre-fill this out. This one, for tracking your FTEs, it's these two columns here. You're just going to say how many employees, which actually doesn't even really matter. It's just something for you to reference and track correctly. And then we're going to add the hours in, because you can see here that, and I put this in here so you can see that 60 hours is 2 FTEs. 80 hours is 2 FTEs, right? So 90 hours would be 3 FTEs. And so you'll see that shows as a 6. So as soon as if it's 20, if you're at 89 hours, right? And so this may be where it may be worth it for you to give somebody, if you're on this threshold, you might have to give somebody an hour or 2 extra to get them over that, right? Because 89 hours is the same as 60 hours, okay? So when it comes to the FTE calculation. So make sure that you're just paying attention to that and using this to track it correctly. That will automatically populate your table down here that's going to compare my previous and my actual FTEs going here. So these formulas feed in. You'll see that it's going to populate from there. And so this is showing 100% retention of employees, which means I can get 100% of it. Now, if you only get to 60%, you're only gonna get 60% of your loan forgiven, right? And this is where early on they were saying, oh, I just need to build back up to my previous level of employees. And then as more information came out, they're saying, no, my FTEs have to equal, right? So, one of the problems is here, like we have this forgivable, total forgivable amount relate. So this 23,000 would be left over, and I have to get to 75% here. So I'd have to up my payroll here to, let's see, 12,000, oops, $12, 12. Right, so you can watch this. Okay, we're at 69. This is going to be, we're going to have to ramp up more. So this is kind of, it will show you where you can plan out and get there. We're at 71%. I might need to get to, a higher number to average out as I build up. Okay, this gets me to my 76%. I'm good to go there. And so I'm going to figure all this out here, and this will tell me my number here where I'm at on my payroll. This number has to be 75% here. Okay, when you're calculating this, right? So pre-plan it out and then overwrite this as you go, the same as the FTE thing. So what that does is this leaves 14,000 left over. Well, now I can go to my other covered expenses, okay? And this is really important here. This column here, these are the 4 things that are here, and then we have the covered expenses here. So if you click this, it's gonna kind of give you the bill. I'm not gonna wait for it to load. It takes a little bit to load, but it's gonna give you the bill and explain within the actual bill to show that these are the covered expenses. So other interest things could be like a car loan. So if you're a catering company and you had these loans in place before February 15th, 2020. Same thing with a lease. A lease had to be in place before February 15th, 2020. Utilities could be, let's go see how this is. All right, here we go. So the utilities can be your internet, your telephone, gas, electric, anything like that. It does not say, let's see, any utility payment, payroll cost, and I do have a footnote to the utilities, but it's the excuse me, it is going to be it's going to be the like I said, internet, not a cable bill, only the internet part of it. the electric, water, gas, the telephone. So those are the covered utilities that you can put in this utilities column. And you have to have had those utilities in place before 2/15 as of February 15th, 2020. This can be a rent with a lease document to prove that you have the rent and all of that is covered. If you own your property, only the interest on your mortgage payment is covered, not any principal payments are covered. No principal payments are covered, only interest on there. And so you can fill these out. I would recommend, and whatever week you're going to be paying your rent, let's say your rent's $5,000 and it will deduct the excess that you have remaining. I'd have 2 rent payments within the period. It does not cover March rent or at this point in time, April rent. If you're able to pay April rent in April, then that would have, if you've already funded a couple weeks ago, that would do it. But it's only within the 8-week time frame that you can't go back and pay a March rent with your PPP money. Okay, so and then we go here. Okay, I paid and then I have my, let's say, well, most restaurants are going to have higher utilities than that, right? Something like that. Okay, and then this is only interest. So if you had like a catering van or something with a loan on there, it'd just only be the interest on that, right? So I don't know, let's call this $100 on that. All right. So here it says, hey, I have excess of 10,133. I go back to the page here. That actually put me over. So that was excess allowed, but we went over on it there. Let's see. Percentage converted 25. So we had 14,000 in excess here. This was the max available to spend, which would be the 25% of the total loan that we have in there. So from there, we are good to go. So if I had 0 there, I go back and have that max available spend with it there. Okay, back. Okay, here. All right, so we are wrapping up here. I'm actually going to reduce that a bit so I can show that I'm over. Any questions?
Yes, so we have a couple questions.
Okay.
First one is from Ryan. He said, I saw the U.S. Treasury website that you have until June 30th to bring your FTE back up with a reduction in the loan forgiveness. Is that true?
So this is where, when we're looking at these, at bringing the FTEs up, it's saying the average. And so let's see, go here and then let me see if I can actually find that forgiveness criteria in here. That's the prorated. All right, let me find it. Let me find it for you, Ryan. So forgiveness. We're going to look at payroll costs. That's our payroll cost to find. The other is the other cost to find. I think it's going to be in this one. Let it load. Be patient with it. Okay, so we're going back to reading the 8-period covered rent obligations, eligible to receive payroll costs. Okay. It's in this reading where it's divided by, and it's going to say forgiveness. Okay. I think I might go back to that first one. Okay, so here's where it is. The amount of loan forgiveness under this section shall be reduced but not increased by multiplying the amount described in subsection B by the quotient obtained by dividing, right? So your forgiveness is your subsection B, which is your beginning amount, and then divided by by this year's amount, right? And it's saying that here. So unless you're seeing something I am, this is saying that it's taking your FTEs of last year divided by your FTEs of this year. And like I said before, that it seemed like that was a lot what people were saying, is that you had to be back up by June 30th to your previous number of employees. But when you're reading this, it's the quotient of last year's FTE by the quotient of this divided by this year's FTEs. I'm not seeing where it says by June 30th that you have to be back up. That and I know what you're saying, because that was going around and that's what people were saying, and it might have been something that was in the first bill in the first wave, but this is the updated bill and where we're at. So it may have said that in the first bill, but this is the one that is law now. So I don't believe it's different if you were funded in the first round or the second round, that they just updated the law based on this. So it's and it's telling you the equation for figuring it out. Okay, Brittany, any other questions?
Yep, we have a bunch of other questions. Yep. So Dean asked for clarification, are CAM charges which are paid with rent considered as rent for this purpose?
I believe that they are, because they're in your lease. So it's like whatever's in your lease. So if those CAM charges are in your lease, I'm 99% sure you're covered on that. That's part of your lease agreement. And what it says in there, so if we go and we look at that, so here we are interpreting law, and I'm not an attorney, okay? I'm just reading the law as somebody that's an expert in the restaurant and has been researching this madly for your benefit. It's saying that other covered expenses. It's basically saying that what's in your lease as of 2/15/2020 is what would be covered. So let this load. Utilities, any interest. Interest on mortgage. Debt obligations incurred before the covered period. That's where we talked about the lease. So, okay, including rent under a lease agreement, right? So if it's in your lease, it says right there, it's covered. Okay.
Awesome. So the next question is, for interest, we have investments in business as a personal loan to businesses. Would the interest on the note be forgivable?
If you have a note that's been created and in place as of 2/15/2020.
Another question from Dwayne. If the April rent is invoiced before refunded, is it excluded from the covered expenses?
I think it's when you pay it. So it may be being paid late, but you're paying it within the time frame. So I think you might have been okay, because that's just you paying the rent within that time frame, and then you were funded within April. That would make sense that you'd be able to do that, even if it was, let's say you were funded the 15th, but it was due April 1st. I think if you're paying that April rent in there, and I'm saying I think, like I said, I'm not an attorney, and these aren't entirely clear, but it would make sense, and that doesn't make it right, that hey, here's this, I'm paying within the 8-week time frame, and it's my April rent, and I'm in April. I know for a fact that you just can't go back and pay your past due rent like from a previous month.
Awesome. So Forrest asked, our PPP funds came in mid-payroll. Do we split the payroll by hours worked before and after our funding date, or do we just look at the date the funds were spent? 5/5/20, even if the portion of that was for hours worked before we received the funds?
So there's no clarity on that. And so it's going to be, hey, this is the money going out for that payroll. And then you can start calculating your FTEs within that 8-week time frame. So I'd say basically choose what works best for you, because there's no explanation on that. So whatever math works out in your favor is what I would do.
Anonymous attendee said, please go over cash tips and payroll expenses and how the biweekly payroll dollar amount is calculated to over 75% of the loan.
Right. So it's just taking, so if we go, let's go back to the spreadsheet. Okay. So, I mean, we're just getting into the formulas of the spreadsheet. So here we have 90,000 times 75% divided by 4, because if you're biweekly, you're going to have 4 payrolls in that time frame. So you'll see that's where that number is coming from. So you'll have 4 if you're biweekly, you will have 4 payrolls that hit in that time, and then you have to use 75% of that money on payroll. And these are the things that are considered payroll. All of these things are considered payroll. Okay. What was the other
Jason
part of
Nagger
it?
asked.
Yep. Go ahead.
Oh, sorry.
I think I got both part of the questions. Oh, the tips. It
Yeah,
was the
that's
tips.
sort of,
Yeah, the average. It would be where, let's say you have a bartender that was averaging $22 an hour with tips on their the last pay period that before 215, then you can pay them $22 an hour, right? And there's nothing that says you can't in fact, commissions, bonus, all that is part of it. If you have manager bonuses that need to be paid out and stuff, you just can't go over 100,000 a year. So that means in a payroll, right, you can't go over, and it's prorated, right? So I can't go, if I'm biweekly divided by 26, I can't go over 38, 46, 15 on a paycheck. Okay, go ahead.
All right, the next question is going to be from Jason. I received my PPP funds yesterday. Is it possible to delay the start of the 8 weeks until the start of my first period?
Nope, that's one of the big complaints. That's one of the big complaints about this. Is, if you need to, you may run a weekly payroll to make sure you fit extra in there. If that's where the timing is working out better for you, to run, like if we're running here, let's say you had a weekend here and then I have 1 week, we'll run a weekly payroll in there, especially if I haven't used all my funds. Don't let this set empty, right? Run another payroll here if I need to meet it, right? And just run a week's payroll to stay in the guidelines. But you cannot change the clock, and that's one of the biggest complaints. There was a lot of lobbying to make it 12 weeks, and it just the clock starts when you get the money. So I'm sorry about that.
Dwayne wanted to let us know, exemption for rehires, not later than June 30th, 2020. The eligible employer has estimated the reduction in the number of full-time equivalent employees. And then also, Teresa, she wants to know, my loan date was for 4/28. I just received my funds today. I have been closed and I'm bringing back my staff this week. How do I make up for the lost time for the last 8 weeks? For the 8 weeks.
So you've missed 3 days, so 4/28. So it took 3 days for you to get your money. It's calculated based on 4/28, and you can count. I guess you haven't had them back yet or hired them back. You've lost that. There may be an argument for what you're saying. It makes sense to me, but what the law is saying is that's based on the loan date. So, I just if I wouldn't chance it, I want my loan forgiven. And so, I'm just, you may have to help your averages, have them work a bit more in there towards the end to increase your average.
Any other questions? Please ask on chat.
Okay. Well, I appreciate everybody, and I want you to know that you can reach us. Brittany, what's the number to call? 87.
623.
Okay.
Oh, that
Go ahead.
877.
No, go ahead.
So we
It's
have
fine.
two.
Go ahead.
So it's going to be 623-266-9611. We also have toll free 866-517-9993.
My email is fred@restaurantsystemspro.net, fred@restaurantsystemspro.net, and feel free to send me questions. If you don't have the spreadsheets, feel free to inquire so that we can send them to you. And we just want to be here to serve you well. Do we have?
Yep, a couple other questions actually.
Okay.
Ryan just
All
said
right.
there's a section in the CARES Act about paying $33K during the period. That would be more than $100K a year average. So you wanted to let us know that. Linda Johnson said, will our bookkeeper help with these numbers?
Yes.
They should be able to help you. Yep.
Yeah. We're her bookkeeper.
Oh, okay, perfect.
Yeah.
And then let's see. Dean just wants to say thank you. And then Teresa, I see your hands raised. Please let me know if you have any questions.
Love it, Linda. That's where I can say, hey, if you need bookkeeping, we offer it. Thank you for that, Linda. And we'll do the shoot for you.
Monica said, if an employee makes tips while working the next 2 months, are we paying them the past rate plus tips? Can we keep both forms of tips?
It depends on how much you have available. If you're trying to hit that 75 and struggling to get it, pay them and let them keep their tips. If you need to reserve some of it to pay rent or something, then maybe you reduce it and go from there. It's basically how you need to use the money to make sure you get it forgiven.
So we have another question. Ian, are real estate taxes covered as they are part of the lease as well, or in the lease as well?
So if they're part of the lease, they should be covered. Yes. I mean, that's where I'm looking at. Like I said, I'm not an attorney, but looking at the law says there that, the rent in your lease.
And then Ryan wanted to clarify his question. So his question originally was, there was a section in the CARES Act paying $33K during the period. That would be more than $100K a year average.
So I don't know where that says you cannot pay more than $100K. I think that's been clear as bell. I'm not knowing where the 33 per quarter would be. It's 100,000. Even when you're calculating what your PPP was, you couldn't even claim a payroll over 100,000 and claiming it. So 100,000 is that you cannot go over it, and it's all prorated. And let's see. Let's see here. Bring that up. Maybe we can discuss it further, but I've not seen anything that says you can go over the 100,000, and they keep reinforcing it everywhere of not going over 100,000 on the forgiveness for payroll. And in fact, I have it here. Let's see. This is the, in this section, kind of explaining the payroll. It's saying, hey, the sum of payments of any compensation that cannot go more than 100,000 a year as prorated for the covered period. Okay, so it's that 8 weeks. So essentially what that means is, well, let's see, 100,000 divided by 52 weeks times 8 weeks gives me a maximum of 15,384 that I could pay out in that time frame. More questions?
Yep. Let's see. Anonymous said payroll applies to all employees, FTE and PTE, even if FTE are no PTE. Now PTE, sorry.
It applies to all. So your part-timers have to, so if I have two part-timers that work 15 hours each, they're one FTE, right? So your part-timers are part of the equation, but they have to get to that full-time equivalent. So 2 15 hours a weekers equal one FTE. I think I got that. There was a lot of letters in that question.
Then he or she also wanted to ask, when the 8-week period ends, is that the date the bank will look at for the FTE average to determine forgiveness?
Yes. Yeah, it's going to be after that. And what it is I don't think that there's going to be, I think it's just going to, that it's not that they're looking at it to determine forgiveness. You're going to tell them the numbers, and then it's just like you're when you do your taxes, you're going to tell them all of your information, and it's if you get audited that you get in trouble, so just be truthful in reporting it. You're going to have to report it yourself, and then some people are going to get audited, and that's when you could have trouble. And it'll be sometime in October or November. So if you get funded today, your first payment will be November 5th. And like if we're going to go to that spreadsheet, let's say I'm using less, right? So we get to that, and I go here, let's say, and I don't use this number here. So I have a $5,000 loan. It's telling me, hey, my first payment's due 11/1, and it'll be $281.38. And then these are right here, these documents required for forgiveness. These are the things that you're going to have to prove it. It doesn't necessarily mean that they're submitted, but if you get audited, and like I said, things can change, but it's really kind of just like filing your taxes. You answer the questions truthfully, and it's where if you get audited that you'll have problems. So here's the documentation that you're going to need to prove these things. So all those payroll reports and stuff you're going to need, mainly those 941 reports and whatnot.
Awesome. Jason said, if you own the building in a different company entity and the restaurant has a lease agreement in place, this then is the rent forgiven?
Yeah, you should have been good to go. When you did your PPP application, and asked about affiliate businesses. So I think if you did not disclose that as an affiliate business, when you did your PPP application is where you might get into trouble. But if you disclose that as an affiliate business when doing your PPP application, you're fine.
So we're going to go back to Ian's question. Earlier, we were talking about the 30K, 33K, and the 100K. He asked, so if an individual makes more than 100K a year, the maximum that would apply to the loan would be the weekly salary that reaches under 100K a year, correct?
Yeah, it's all prorated. Yes. Yep. And that's where I did the maximum they could get paid on this would be $15,384 during the 8-week period.
Monica wrote, there's nothing stopping us from hiring significant others, family members, etc. to work, right? Correct.
Yeah, I don't believe so, unless there's something that it's in the way your corporation's set up that owners or something can't be put on it, but I don't see any problem. I haven't seen anything. The way I can answer that is I haven't seen anything that says you cannot hire family members or anything.
Another question: if you cannot get former employees to take PPP because of UE benefits, we should hire new FTEs as fast as possible, correct?
Yes, correct. And like I said, there's great people in the market right now.
Teresa said, I did not add the EIDL 100,000 or 10,000 to PPP loan because I didn't receive it until after I applied for the PPP. Do I still deduct it on the spreadsheet?
Yes, you still deduct it on the spreadsheet. Can't get both, so you have to deduct one. Yep.
Even if the tips don't equal the amount of tips?
You cut out. I didn't hear the full question.
That's all she wrote. Let me get her to clarify that one. We'll ask another one for now.
Oh, okay.
If prior to COVID-19, a server was making minimum wage plus tips, then they get paid the minimum wage plus the average tips they made.
Correct.
Even if the tips don't equal the amount of tips, workers' comp is included in the payroll.
Workers' comp, even if the tips don't, you mean the claim, if they didn't claim all their tips there, this is a thing where I think you're saying that maybe that you didn't report it to your workers' comp and therefore there's like no record of their tips, because, and this is the problem with them, with your servers not claiming their tips, is now this is one of those times where we tell them to claim their tips, and we tell them over and over again that they have to claim all of their tips. And this is a time where it's just proving that trying to circumvent the system by not claiming all our tips is going to hurt them in this scenario. There's nothing that says you couldn't give a raise though, either. So like if you say, hey, I want to base it on this amount, I don't think there's anything stopping you from doing that, raising their wage based on your assessment of what you want to do and how you need to use the money to get it forgiven. And like I said, I'm not an attorney or a CPA. I'm just reading the law and giving you some tools. All right, Brittany.
All right, no other questions for now.
Okay, well, we appreciate everybody. Hopefully this has been helpful. And we just want to be there to serve you well, and help you in any way we can. Just so everybody knows, we are doing no payments until July 30th if you want to sign up with us. So if you are not a member with us and you are been kicking your tires on whether you need to have systems and operations that can be easily implemented, we don't make things, we're not a magic pill. We just make doing recipe costing cards easier. We make doing inventory easier. We make budgeting easier. We make it to where all your systems are in one place. So your servers have an app that's and they're able to swap shifts and request time off, and then that labor is tied to what my budgeted goals are, and it gives feedback and real-time information on how my managers can save and cut labor in an efficient manner that helps us lead to a good dining experience. And all of those things, from checklist systems to learning management systems and training systems to training videos on recipe costing cards with QR codes, and delegation of tasks and accountability and all of those things, to bookkeeping and check reconciliations and budget versus actual comparisons and labor accruals for payroll. We do all of that for you so that you can focus on the guest and that dining experience and get to a point where you can get more profits in the bank and get your time back as a restaurateur to work on your business instead of constantly in it, and get to a point where you can scale your operations. Looks like there may be some more questions coming in. I'm happy to stay on to answer them.
There is a couple other questions.
Okay.
So for Dwayne and Ryan, they would like to know, is this for current members?
So if
Yes,
you're a current
is.
member, like we're a business and we need to stay functioning,
Mm-hmm.
and we will negotiate with you. Like, so if you're in trouble, give us a call and we'll work something out that works for you and us. We're obviously, if we went to zero, that'd be a big problem for our business, right? And we're offering our clients a lot of resources. I'd rather, as a member, talk to you how we can help you get your sales up and get your operations under control. But we're here for you, man. Whatever we have to do to serve our people well, we're going to do it. So go ahead and reach out. Brittany?
And then I have one more question. She is clarifying her question from earlier, is anonymous. Sorry, here's the full question. Regarding tips, prior to COVID-19, a server was making minimum wage plus tips. Then they get paid the minimum wage plus the average tips they would have made, even if the tips don't equal the amount of tips now.
Yeah, so the amount of tips now, that's not money that has to be PPP. If they're getting tips now, they can just keep that and then you can pay them their wage. If you think you need to pay them less because they're earning tips now to make your PPP forgiveness work out better for you so you can use some of the money for rent, most people are having trouble getting up to the 75% though. And so, likely you just want to pay them what their average was before. And if they're making tips, they're fantastic. I mean, they're putting themselves on the line with masks and working to serve the public. And so if they can make extra money, fantastic. That's my opinion. Yeah.
No other questions?
All right, Fred at restaurantsystemspro.net. Please email me. We're here to serve you well, and we'll be here to do it. Our whole team. Okay, we're coming up on a couple more minutes. So if there's like any other questions, we have time for I think one more if one came in. Did one come in, Brittany, or are we good to sign off?
Nope. I was writing your email, so no.
Okay. Oh, fantastic. Fantastic. So we appreciate you. We're here for you. Follow us on social media, on Facebook, Restaurant Systems Pro. Follow us on Instagram. We're posting there updates, tips. Um, the clients that we're helping are doing well and are really looking at us. I've had many of our clients say, I don't know what I would do without this. I'd be flying blind. I wouldn't know where my business stood. The weekly prime cost reports let us know where we stand, let us know if we're profitable, if we're not, what's my break-even point, what's my budget, am I hitting it, where am I at with my goals. A lot of our bookkeeping clients were able to do their PPP right away because we had all of their books up to date and ready to go, and they got the applications out there quickly. So we love you, we care about you, we're here for you, and um, we'll continue to serve you well.
And then lastly, Fred, I've had a couple people ask this.
Okay.
Just a heads up, everyone, you can see those 3 files in your email. You should have received it on April 28th. It's called PPP Forgiveness and Reopening Guide.
Okay.
And if you need to rewatch this, it's going to be on YouTube at Restaurant Systems Pro.
If you don't have the spreadsheets and you're just kind of found us going live on YouTube and you're a subscriber and you're not on our email list and didn't receive the email with these spreadsheets, just go ahead and email me and I'll email you back the appropriate spreadsheet from there. All right. Okay, well, thank you everybody, appreciate it, and we are signing off. Stay safe.